What is going on, everybody? It is another amazing, great, fantastic day, morning, weekend, weekday, everything. Oh my goodness, it's a great day. So, hope everybody's enjoying their time wherever you guys are at in the world right now. But this video is going to cover step 4 in my trading strategy. I kind of debated on how I really wanted to go through these last 2 steps because they're very, very key in this. If you remember, we did the 3-line system. We did the heart line system was step 1 in part 1. And then step 2 in part 1 was our confirmation zones. And then step 3 was Fibonacci. And, step 1, 2, 3. Yes. Step 3 was Fibonacci and breaking that down. And then step 4 is where we are right now in part 2 of the strategy. So this would be part 2. So the first 3 were part 1. This is part 2. And these 2, I kind of was trying to figure out how do I want to break this down. But I came down to the conclusion of how I'm going to do this for you guys. So what we're going to do is we're going to start off with harmonic patterns. Okay, so how this looks is when we do harmonic patterns. Okay, so if you guys remember everything that we've done in the core basic strategy videos that Cole and I did, those videos there were basically a base of everything that you're learning right now. So if you remember the trends, right? So we have the true trends. Now, when we have the true trends, we were having the start of our downtrend, right? And then we would have our high, low, and then we would have our lower high here, right? Then we would have our extension of that move like this, right? And then we would have our pull back into our lower high, and then we would have our extension, and then we would have our pullback of the lower high, right? And then if it doesn't extend and it stops, we know the trend is switched, and all it would do is it would close above our last leg. Then we would have our trend switch, and it would go to the upside like that. Oops. So when we have this type of formation here, okay, not just this whole thing has to look like this, but specifically this formation here and this formation here, okay? So basically I'm talking about our low to higher low to higher high. And I'm talking about our high to lower high to lower low. That formation basically looks like a lightning bolt, right? So what we're trying to get, right, is we're trying to get the move beyond our box strategy or 3-line system. So if you were to have this down here, you would basically have your confirmation buy zone there, right? And then below down there, you would have your confirmation sell zone to the downside. And in the middle, you would have your heart line system. So you could pretty much dissect that entire market there. And what you're looking for is once you see this move here, you see your excitable move and you see your candlesticks happen, what you're then looking to do is to fib it. You're going to right to left pull it because it's an uptrend. So you're going to pull right to left like this, okay? And what you're looking to do is you're looking to enter off the 61.8, the 50, or the 38.2. Now for this instance, if we have not entered on our 61.8 or our 50, then we would for sure enter on our 38.2 because it pairs with our confirmation buy zone. So that gives us another confirmation zone in our strategy. Now, what we want to then see is our 127, our 161, 200, 261. Those expansions are all take profits, okay? But here's the dynamic behind what we're looking at here. So say that we did not have this right here. We didn't have that line. We just had our pullback. What the harmonic pattern is that I'm going to teach you is our AB equals CD pattern, okay? So what this is when we pair this pattern, because here's how I trade. I trade patterns, waves, formations. So all I do is I let trades consolidate. I let them do that, and I have that strategy where I go in with the 3-line system, and I go in with the confirmation zone system, and with the heart line and the 3-line system are the same thing essentially. So I go in with that heart line system, and then I dissect the market in here. This is what I do. I'll dissect it, and what I got to see is I got to see a top bottom top form or a bottom top bottom form, and that's what I have to see to be able to understand that, okay, now the market is starting to set up. Because essentially, if you look at that strategy, it's downtrending or it's uptrending, and then it sits at a consolidation zone. So for this instance, I drew out a downtrend, and I drew the consolidation, and I drew the breakout and trend switch there. But how can we follow the trend after that? What can we start to depict and see on our moves after that? Okay, so that's how we get our harmonics, and that's how we use our fibs. Now, if you notice that this fib right here, you see this 127? If you were to pull a horizontal line right here, you're to see that it is very, very close to this support here, and then very, very close to this resistance here. That's not by mistake. These fibs are all drawn out through mathematically, okay? So whenever you look at these types of fibs and you see the pulls and things like that, that's what this is supposed to follow. They're supposed to follow that. So when this marries with a previous resistance, there's a reason why it's doing that. So the reason why when we buy down here, we put our take profits here, here, and here is because usually they marry with a previous major support or resistance. Now the 161.8 doesn't really, but you see that the 200 is very close to that level. So we would know those completions there. Now, and like I said, there's a reason why I put the take profits at the 127 and the 161, and why I enter on these 3 strategic fib levels. So what we have to then depict is when we have this pulled out like this, okay, we then have to say, okay, take profit 1, 127.2, take profit 2, 161.8. Here's the cool thing though. So what I'll do is I will place a line right here, and I will place one right here, and I will delete this. So those are our 2 take profit zones. So what this becomes now, guys, is this little lovely person right here, okay? This becomes A. This is your A leg. The way you know that it is an A leg is if it's an excitable move. Does that make sense? So it has to be an excitable move. Then the way that you know this up here is your B leg, is it has the retracement of it up here. So you can have an excitable move for 50,000 pips, but until you start seeing bulls and bears come in at the top and create a level, that's when you know it's your B leg. So then what we're gonna have is our C leg. This is the B to C retracement. So this is what this is this is the A to B leg, and this is a B to C retracement. Now, what we have is AB equals CD, okay? Now notice these are our 2 take profits up here. All you have to do to get this harmonic pattern here, which I'm gonna tell you what the actual pattern is you take this line here and you will duplicate it. You'll just click the little duplicate button. You'll duplicate it and you'll set it here. Now, do you see how it breaks through our first take profit and touches our final one? Right about edit, right there. It touches that final one. This is what we call our AB equals CD, which this becomes our Gartley sell pattern is what this becomes. So I'll put that at the top up here. So I'm going to put GSP, G.SP, like that. That is our Gartley sell pattern, okay? So what's going to happen with this level is this is what we call our lightning bolt. So this has not formed yet. So what you have done is you enter down here with the expectancy that this trade is going to extend to your take profit 1, your take profit 2. What your Gartley sell pattern is then a counter to this pattern completion. So what happens now, do you see the dynamic behind this? So if you look over to the left, there's a bunch of Gartley buy patterns over here. That's the only difference. That's why the market retraces. This is why I say I trade in patterns, formations. That's why I do that, and in waves. Waves, patterns, and formations, because that's how the market moves. So when we get out of consolidation, what we want to figure out is, okay, we're out of consolidation now. What is going to happen after that? This is what's going to happen after that if this holds true. We're going to get the AB leg to form. That's your excitable move out of that. That's whenever you pull your fibs. And you're like, okay, cool. You're going to pull your fibs. Then you're going to see your retracement. And you're like, okay, the 61.8, the 50, the 38.2. And you're going to figure out what you like to do. The reason why I like these 61.8 entries is the AB equals CD pattern always completes at that 161.8. That's why I do that there. I like this one here. If it marries with a confirmation buy zone, I love taking that one. Stop always goes below the 50. The 51, if I were to take that, same thing. The pattern completes normally somewhere in the middle. But if you see that you can duplicate this leg and it will complete around this level up here, the 161.8, that is a Gartley sell pattern. As soon as your take profit gets hit, you would sell this trade, okay? As soon as it touches it. You don't wait any time after that. As soon as it touches it. Now, remember I said that the fib extensions play confirmation, support, and resistance? That's exactly what they pair as. So that means that if you take this trade here and it hits this level, right, and it drops, but it comes back down to the 127, that just means that this excitable move, if you watch this, actually no, that'll be in the next step. That just means this excitable move here just came down to the 127 and halted, that it is now playing a support because it's breaking that level, right? Because you can see it plays a resistance over here. So it broke it. Now it's like, okay, it's sitting above there. And then that's creating a higher low, okay? So let me delete this. So then it will be here, and then what it would do is it will come like this and create a higher low. See how it is still uptrending though? The retracement's just not as big. That's what we call shallow retracement. So when we have this, this is our AB equals CD pattern, which then completes our Gartley sell pattern. The exact same thing would occur for over here. You would have your A, B, CD, or BC retracement. Then you have your CD leg right here. This is your AB equals CD, which this is your Gartley buy pattern. And if you were to pull the fib like that, it would look like this. And I didn't actually duplicate this leg. I kept it like this. But as you notice, it completed at that 127 level. So that's why I put those at those take profit zones. So now let's go find some examples in the chart so that we can actually see what this looks like. So let's go and find it. And remember, guys, you don't want to just look at all these candlesticks like this. Like, you don't want to be like, okay, what's this one, that one, this one, that one, this one. Oh, this one has a long wick. Oh, this one has a long wick here. Oh, this one has this. Just watch the move. And when they crest, that becomes your retracement. So if you see this right here, you see all this noise is going on in here. But this is really your true excitable move right here, because this is your crest. So you could see it as soon as it comes down. It has like more of a deeper retrace. So if you were to look at that, you could draw it like this. And these ABs, they don't go at the wick, by the way. I didn't say that earlier. They don't go wick to wick. They go body to body, okay? So you want to see them go body to body like that right there. See how I put it body to body? And then you would just duplicate it right here at this body down here. So this is how this would work. It would go just like this. So that's how it would work. And when you fib this, okay, we take it like this. Fibs go wick to wick. That's how the fibs go. So we get that. And this one doesn't look very clean, but the completion is near this level up here. We can see that this is where our completion is. And you see that it completed it almost perfectly with right there. And then it dropped 346 pips to that downside. You don't have to put it that far away if you feel more comfortable. But essentially, remember, you're not going to see all this here. It's going to be like blank. So you're not going to see it. I don't know if this is on. Yeah, so it's going to be blank. So remember, you're literally just going off of the potential of what you think could happen. So I don't want you to think that you'll be able to see this over here, because you're not going to be able to see this. It's going to be like you're going to see that, and this is what you're going to see right here is this. So you're going to say, okay, the completion is somewhere up at that level. So either you could choose to put your take profit right at the 127 level, or you could choose to put it a little bit lower. But just so you know, when you see stuff like this, these are pattern completions. So now you have an idea like, oh, that's why I didn't hit my 127.2. So you can move your stop loss up. You can look to do that. That one, I just wanted to show that one. Well, I just wasn't really expecting to show that one. I'm just trying to find what these will look like and try to give you guys examples. You can see it's uptrending. This one here, this one's a pretty good one if you were to look at this. So how you would do this is you would just measure it like this. Measure it from here to here. Actually, this would be more of the completion there. And then you would just duplicate this line right there. So as we see, we have a little bit more room to go until it completes that pattern. And let's check the fib. If the fib confirms this and marries with it, then that will be your for sure take profit. So we got retracement to the 61.8. We got the first take profit getting hit. We have the completion up there. Where's our 161? Very close. So we can see that our trade has another 124 pips to go up until the pattern completes. So we would take this and we would see that this is about, let me try to get it right, 35 pips away. So we can see that's like 35 pips away from that level. So we know for sure that when it touches this level, we would look to short this. Remember, guys, we are taking the trades as soon as they touch our levels. We have to be able to understand why it does this, and we have to get in the market so that we can scalp, swing, intraday trade, however we want to do it, and pay ourselves week by week, month by month. Okay, some of the best traders I know only trade about 5 to 10 times a month, and they catch over 1,000 pips in those trades. But there's a lot of times that they take smaller trades as well, like 25, 50, 100 pips when they do it to pay themselves throughout the week. So let's go find some more. There's a lot of, see all these smaller ones here? See the smaller ones? There's a lot of these guys. You'll start to see that there's all these formations. This one's very easy to see here. So we could take it from here to here, about right there. And what we do is we would fib pull that from here like this. And we see that we get our 161.8 to complete up there. We duplicate this from the wicks or from the bodies, and we see right here, there was our duplicated right on the 127. So as soon as it touches it, you would take this trade, and you see it drops down 119 pips. Still goes up, drops again though, right? But as soon as it touches it, it still goes down. So my goal in this is to show you guys how to catch pips consistently in following these. These are on the daily chart. I know there's some on the weekly chart. Odd USD is actually, see right now, it's actually going to complete that pattern. If you look at it here, currently, it's doing that. And you would just duplicate this whole thing. Now, I'm going to duplicate it right here because this is still the higher low. Notice it's still closing higher high, higher highs. This is the pattern right here. And we notice, if you look at that, put a resistance by that level right there. Look what it pairs with. A support here and a resistance here. And watch this. Take this here. Look at that. Beautiful. See how that works? See how that works. It is just amazing. That's like 61 pips. That's nothing in there. Okay. I'm currently long in this pair actually from about right here. So I'm about a good 400, yeah, I am about 400 pips up. Maybe I'm a little closer or a little lower than that, because I took my formations off of this pattern here. This is another ABCD pattern right there. This is the big one. There's a smaller one right here. Okay, take it off this and watch this. Pattern completes up there off of that one. So see how the pattern completes up there? So we'll have some choppiness within this level here of about 150, 60 pips. We'll have some choppiness, which makes sense because we had choppiness over there. So we want to trade with how the patterns and the formations and all of those are moving. There's smaller ones. Oh, this was a great one. I remember this one when I traded this. This is when I first started learning about harmonic patterns last year. So see this one here? This AB, this is almost like perfect. And this was this was like textbook Gartley buy pattern. So let me snag this here. There's actually two of them that did it in it. So you see that there. This was a little longer. This one was. You see I didn't go all the way to complete it. But when you have this to go with it, you actually save yourself a lot of trouble. That's why I trade fibs paired with harmonics, and that's why I decided to show you this next, because my next step and next video that I show you is going to be even better from this. So imagine how clear this is that you guys are seeing this. All you guys have to do is you just have to go around and mess with it. You got to go play around with it and trade with it. Go in and back test. This is what I'm doing. I'm actually back testing in front of you guys so you can see how this works. Because all my trades, I already know like what I've done, what I look for, what I'll continue to look for. This is a little 4-hour ABCD pattern right here with the Gartley buy in it. So if you were to scale this down to the 4, you would have all your little candlesticks here. So how you would do this is you'd look at it like this from here to here. You can, and guys, you can do this if you want. You can put that in there, but I just duplicate it because it's just extra stuff that I don't need to mess with. And then you would just put it right here like that. And you see the pattern completes about right there. And then if you pull the Fibonacci from this excitable move here, you see that it completes right near that 161.8. And you see that there. And so that would be our take profits in our zones like that. So it's just about following when the excitable moves happen, guys. It's just about following those whenever they happen. We're not sitting here and trying to be anything extra, be fancy. There's small ones that happen right here. You see them. There's smaller ones. They're all over the place. And then when you understand all the things that I've taught you up to this point, and you pair this with it, wait until you see the last one. The last step is the biggest step of all of them, because what it does is it then allows you to get an even more beautiful and sniper-like, ninja-like scalping strategy paired with everything. So I hope you guys enjoyed the value in this video. I hope all you guys have a enjoyable day, a great weekend. I hope you're having a great month, whatever month this is within the year. And I will talk to all of you guys soon.